Ladies and gentlemen, good day and welcome to Sunteck Realty's earnings conference call for Q3 FY2021. We have with us today Mr. Kamal Khetan, Chairman and Managing Director of the company, along with the senior management team of Sunteck comprising of Mr. Manoj Agarwal, Chief Financial Officer, Mr. Prashant Chaubey, Head of Corporate Finance, and Mr. Ronak Rathi, AVP Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before I hand the conference over to the management, I would like to remind you that certain statements made during the course of this call may not be based on historical information or facts and may be forward-looking statements, including those related to general business statements, plans and strategy of the company, its future financial condition and growth prospects. These forward-looking statements are based on the expectations and projections and may involve a number of risks, uncertainties, and other factors that could cause actual results, opportunities, and growth potential to differ materially from those suggested by such statements. I now hand the conference over to Mr. Khetan, Chairman and Managing Director of the company. Thank you, and over to you, sir. Sir, please go ahead.
Can you hear me?
Yes, sir, we can hear you.
Yeah. So, good evening, everybody, and welcome to the earnings call for the third quarter of the financial year 2021. Thank you for joining us. I would like to begin our call with a few business updates. We are continuing to see strong momentum in residential demand in the third quarter as well. In MMR, owing to the combination of various favorable factors, especially the reduction in stamp duty and lower home loan rates, we witnessed significant growth on the pre-sale front, driven by both our ready-to-move-in inventory as well as the newly launched projects in mid-income and aspirational segment. We successfully launched Tower 2 at 4th Avenue, Sunteck City, with pre-sales of over rupees 120 crores within a few weeks of the launch. We are observing a trend of increased demand and renewed buyer interest for high-quality products of developers, especially those with strong balance sheet and high brand recall. We believe demand will continue to funnel for large organized real estate developer as a pedigree of trusted brand drives preference for the new home buyers today. The sales collection trajectory has seen robust growth post the easing of the lockdown, and we remain confident of increasing our market share driven by expanding our city and the world brand. We expect this segment to be long-term growth drivers for the company. While the world brand currently contributes less than 1/3 of our revenue, we intend to increase the same towards 50% on a sustainable basis for a diversified and a balanced portfolio. Our recent acquisition of Vasai and Vasind are a step in this direction. Our continued focus on prudent cash flow management has enabled us to generate strong operating cash flows, which has aided in the further reduction of our already negligible debt. It is the financial discipline that enables financial flexibility to grow our business. All our construction sites, namely 2nd and 4th Avenue at Sunteck City, ODC, Sunteck Westworld and Maxworld, Naigaon, commercial projects at VKC Junction, Sunteck Icon and Sunteck VKC 51, as well as Sunteck Crest at Andheri East, are operating at pre-lockdown execution levels. Our project, Gilbert Hill and Sunteck City, Avenue 1, has also received OC in quarter gone by. Our focus on construction progress has led to strong operating cash flows, and we foresee this momentum to continue. We continue to aggressively explore new opportunities and intend to capitalize on the same, setting the stage for the further sustainable growth and attractive ROEs. We remain confident of our emerging one of the biggest beneficiary of the ongoing consolidation in the industry, basis our balance sheet strength, established track record, and operational cash flow visibility. Thank you, and over to you, Manoj.
Yeah, Mr. Manoj, please go ahead.
Yeah. Thank you, sir. Good evening, everyone, and thank you once again for joining us today. Now, I would like to run you through the financials and business performance numbers for the third quarter and 9 months of financial year 2021. Pre-sales in Q3 FY21 stood at rupees 349 crore as against rupees 200 crore in Q2 FY21. That is an increase of 75% on Q-on-Q basis. I would like to highlight that we have achieved rupees 650 crore of pre-sales for 9 months FY21 as against rupees 613 crore for last financial year same period, which is an increase of 8% year-on-year. Distribution mix of quarterly pre-sales remained balanced and are as follows: 54% in ODC, 18% in Naigaon, and balance 28% in other projects comprising of Gilbert Hill, Signia Waterfront, and Signia High. On collections front, we achieved our highest ever collections in this quarter as a function of healthy pre-sales, operations passed, as well as increase in home loan disbursements. We recorded collections of rupees 253 crore in Q3 FY21. That is a 79% increase on quarter as against rupees 141 crore in Q2 FY21. In terms of financial highlights, we reported a consolidated revenue of rupees 205 crore in Q3 FY21 as against rupees 143 crore in Q2 FY21, a 43% growth on quarter basis and 20% growth on year-on-year basis against rupees 171 crore in Q3 FY20. Revenue stood at rupees 401 crore for 9 months FY21 as against rupees 477 crore in 9 months FY20 last year, impacted due to peak COVID quarter 1 in FY21. Consolidated EBITDA for Q3 FY21 is rupees 45 crore. 45 crore as against rupees 31 crore in Q2 FY21, 44% growth on Q-on-Q basis. EBITDA for 9 months FY21 was rupees 89 crore as against rupees 159 crore for 9 months of previous financial year. Our consolidated EBITDA margin for 9 months FY21 stands at 22%. With respect to PAT, we recorded rupees 22 crore in Q3 of this financial year as against rupees 14 crore in Q2 of FY21, an increase of 59% on Q-on-Q basis, and rupees 33 crore for 9 months 21 as compared to rupees 86 crore in 9 months FY20 last year. As always, we continue to focus on our cash flow management and financial discipline, a must in this environment, and that continues to reflect in our low net debt equity ratio, which has been reduced to 0.24 due to our strong operating cash flows. We can now open the forum for questions from the participants. Thank you very much.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to limit their question to 2 per participant. If time permits, you may join the queue for any follow-up. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. The first question is from the line of Kunal Lakhan from CLSA. Please go ahead.
Hi, good evening, Kamalji and team. Uh, so just for my first question was on the new launches side. If you can give us some direction in terms of how how and when we plan to bring in Andheri West, Vasai, Vasan to the market, and also like further phases of our ongoing projects, mainly Naigaon per se.
Hi, Kunal. Thanks for the questions. Kunal, we are targeting the launch of both Vasai and Vasin before the first half of FY22. So before the half yearly of FY22. And in fact, the significant effort and approvals on plannings and design is currently being undertaken, and to ensure that we continue our sales momentum. And as far as Naigaon is also concerned, we are looking to do a phase 3 launch very soon.
And Andheri West, sir?
So Andheri West, very frankly, so we are already, in fact, the Andheri West project, there are some concerns. There are, in fact, talks going on with our JV partner. Whatever will be the outcome, we will keep you all informed accordingly, Kunal.
Okay, if you can you share what are the concerns?
I think can't do this on this. So it will come into the public domain for sure.
Okay, we'll wait for that. And so my second question, Kamalji, is on the reduction in the approval cost by the state government. How does that impact our cost estimates for Vasai, Vasin, and even the future phases of Naigaon?
So there are definitely there will be the various project. Obviously, it will be only beneficial, but the various project, the benefits will be much more. Where it is like ODC and all, where the entire benefit of the reduction in stamp duty comes to the Sunteck, where it is in the scope of JV partner, the benefit obviously goes to the JV partner. It depends how the structuring, the JDA structure has happened. It is too early to very frankly comment, but definitely it is a very positive for the entire industry that we have to understand. For all our upcoming launches as well as the under construction projects, we are assessing what will be the potential cost saving and the opportunity cost to the exact what it will be. And that again, we will try to put it in the public domain once we have more clarity, and we will definitely share more perspective on that aspect.
So Kamalji, correct me if I'm wrong. So typically FSI and premium cost in joint development is borne by the partner, the landowner, right?
Yes.
And in our case, since the FSI premiums have been halved, so the benefit will accrue to the landowner. And if yes, then how would we revisit the terms of the revenue share in that case?
So the FSI premium which has been half is only in which is in Mumbai BMC, which is not, I think, in VVMC. So maybe the landlord partner might not get that benefit at all. So whereas the benefit is in BMC, Bombay Municipal Corporation, it's not across the Maharashtra, to my knowledge. And let me have a clarity. And if there is a substantial, and we have to take into consideration the benefit of unified DCR also. So it is very frankly, Kunal, it is too early for me to make a exact benefit who will what get. But as far as our MMR, especially Mumbai project, which is majorly now today ODC, and our BKC are the commercial projects, BKC 51, where the entire premiums are to our account, BKC 51, BKC Icon, Sunteck Icon and Sunteck BKC 51, as well as Sunteck Crest, all the premiums are to our account. So there we save, I can say, substantial cost. And whereas in, which is Vasai, Vasin and Naigaon, I don't think that benefit is exactly there to them. And if there is, I think if there is substantial anything, obviously we'll try to take some benefit to our account as well.
Thank you. Mr. Lakan, request you to join the question queue for any follow-up. Thank you. The next question is from the line of Pritesh Sheth from Edelweiss Wealth. Please go ahead.
Yeah, sir. Thanks for the. My first question is, so how much of the inventory is left now in ODC, both launched and the area which is not launched yet?
Hi, Pritesh. As far as ODC is concerned, in 4th Avenue, we have close to around 1,000 crores of unsold potential inventory. And the total from entire ODC that we have launched till now, that is Avenue 1, Avenue 2 and 4th Avenue, the total potential is in the range of 1,300 crores to 1,400 crores. So that is the total potential, out of which 4th Avenue is close to 1,000 crores.
Okay, and no more residential launch will happen in ODC, right? I mean, that's the inventory we had overall.
No. Definitely we have, I think we have already said there is even a 6th Avenue over and above the 5th Avenue of the commercial ODC. So definitely there will be many more launches you may see of the residential. We can't tell you right now, it's too early. But
okay,
no one can stop Sunteck if we want to convert part of the 5th Avenue, which is commercial, into a residential as well. Because we can do, in fact, like out of the 3 million square feet of the commercial which we are looking from the 5th Avenue, we can easily do, if we want to change the mix, looking at the demand and supply, what is the demand in commercial versus what is the demand in residential. We have both the options, whether we can do 1 million residential or 2 million commercial or entire 3 million commercial or 1.5 million commercial and 1.5 million residential. We have a lot of flexibility over and above the 6th Avenue, which we are looking to do only residential.
Okay, got it. Thanks. And similar question for Naigaon, if I want to know what would be the inventory right now, and how much can we see in terms of launches from here on?
So, Pritesh, again, I would like to give you the numbers of the unsold potential value from our existing launches only, which is Westworld and Maxworld. So in Westworld and Maxworld, the total unsold potential value that we are sitting today at is close to around 500 crores. That is the unsold potential. And also, this is just the initial phases of the Naigaon project. We have close to another 7.5 million square feet, which is yet to be launched. So that I am not considering in this 500 crores which I have given you.
Sure. Thanks. That is helpful. Thank you. I'll join back the queue. Thank you.
Thank you. Reminder to our participants to please limit your question to 2 per participant. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Thank you for taking my question, sir. So 2 questions from my end. One was, if you could help us understand how has the sales velocity been in Q4, because why I ask this is essentially because there were these media reports with registration numbers, and registration numbers in January were significantly lower than December. So if and the only change that I could think between December and January was essentially taken up by 1%. So is it just that the registration numbers have been low, your end sales are still the same, or sales velocity again has changed in the way the registration numbers have changed? And if you could share your thoughts on this, please.
Yeah, hi Prem, Kamalia. So I think since the biggest advantage I think Sunteck has is we are across all the segments, and I see the demand for mid-income group and the aspirational luxury group, which is affordable. I think the demand continues to be very strong. If you talk about the registration numbers, a lot of time obviously people do the bookings. If you have seen in December, there was a big rush for the registration. Not necessarily the sales has happened in December. It made the sales might have happened in October, November, or even sales before that. So people tend to do it towards the end of the date. So we kind of look the similar similar way the registration will pick up towards the in the March month. So the sales happening in January as well as February, we will see even the sales picking up and the registration picking up because of the sales which have accumulated and not registered in January, February as well.
Sure, sir. And sir, my second question was, so there was this media article sometime back wherein it seems there's been a favorable ruling in our favor, in that case involving Goodwill Theatre. So possible to share more on this? What exactly, where exactly is the property and what is the status?
So it was a small deal. In fact, we have paid 2.5 crore, and the terms didn't work out. So I think we didn't go ahead in the deal, and they were supposed to refund the money, and which they were not refunding it. And I think we got the verdict in our favor, and I think we are expecting the refund of the money.
Sure. So we're seeking the money, but we're not planning to kind of take that project up.
No, we're not interested. I don't think. For us, very frankly, everything is more important, not only the commercial, the partner and everything. So while doing the due diligence, we get extra cautious and at whatever we find. That was the initial just term sheet level. So that's why. So we were very clear that we want to back it out. So we backed up.
Thank you. Mr. Khurana, request you to join the queue for any follow-up. Also, any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Sagar Kalpani from Motilal Oswal. Please go ahead.
Yeah, hi. Thanks for this opportunity. Am I audible?
Yes, you are, sir.
Yeah. So I just wanted to understand that in the opening remarks, Kamal sir, you mentioned about we are actively looking at new opportunities for new ventures. So is this going to be only through like a joint development model, or are we open to paying for land also to look at new projects right now?
So good question, Sagar. Obviously, we would not refrain from not taking the projects by paying the money and acquiring fully. But if there is so much of opportunity and you can continue to grow without putting the capital and you can maintain asset light, why should you try to stress the balance sheet? And if your ROEs are improving and your momentum, your growth is not compromised, and in fact there is so much of opportunities in the market, so our preference will always be keeping it asset light, but that does not mean that we will not acquire if there is something which is available and we can buy. There is enough opportunity in the market for even that, but the preference will be always for the asset light.
Got it. And just one follow-up on this. Will this be only in the MMR region and the outskirts, or are you now considering looking at projects away as well?
Again, my answer will be exactly same, because there are so much of opportunity within MMR region. So there is no reason why we should try and go and venture outside, unless and until we see that there is the opportunities have reduced. Then only it makes sense that we should go out of MMR and try to explore. Why stretch our bandwidth? We can use the same bandwidth in a more optimal manner to do more projects within MMR. Also, when it comes to making asset light, you can always do asset light too. This is a part answer to your last question again, just to give you more clarity on that question. It's that even if we buy, there are a number of private equity players who are ready to fund and put pure equity with Sunteck. They are already shown their inclination that if you want to buy, we are ready to fund that, and you can still make Sunteck and buy the land and make it asset light by involving a private equity player. So that is another one reason that we are very clear that we'll maintain asset light, but not leave the opportunity to even buy the land parcel if they are available at a nice at a good price point.
Makes sense, sir. Thanks a lot for the detailed clarifications and best wishes.
Thank you, Sagar. Thanks.
Thank you. The next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Hi. Good evening, sir, and congratulations for a good set of numbers. Couple of questions from my side. First, with respect to ODC 5, when do we expect we can finalize upon the plan? How much commercial or resi, etc. that we do. Second, the status of BKC commercial projects. When do we expect to complete them? And thirdly, our thought process regarding liquidation of inventory in the BKC project. Thank you.
So, Parvez, ODC Fifth Avenue, which is a commercial project, definitely we want to launch it ASAP. But since this COVID was there and we wanted to see the demand, how is the demand continuing in the commercial segment, we don't just want to block because commercial needs a lot of capex. So we don't want to put too much of capex and then we'll end up in a situation where the balance sheet is stressed and the demand for commercial is not picked up, or if there is a stress in the commercial. So we are waiting for that clarity. I think in the next few months we should have that clarity, and we will definitely start constructing at least part of like one tower, or start with one tower of commercial in that Fifth Avenue. So as far as your Fifth Avenue is concerned, that is the answer. And coming to the BKC commercial projects, I think in BKC Icon, Sunteck Icon, the project, we are already at the third level of slab, I believe, close to. And we are looking to complete this project over a period of next 12 to 15 months. Coming to BKC Gateway, Sunteck Gateway, BKC 51, that is, we are looking to complete over a period of 18 months. So that, and to your third question, the residential, BKC residential sales, we have to accept that unfortunately in last 2 quarters we have not been able to move the BKC inventory. But there is definitely now the spike in inquiry in BKC large ticket size, and in the large ticket size, sometimes the deals take longer time for a turnaround. Hopefully this quarter we will be able to see some positive outcome of our efforts.
Sure, sir. Thanks. All the best.
Thank you, Parvez. Thanks a lot.
Thank you. The next question is from the line of Sandeep Nayak from Alpha Accurate. Please go ahead.
Yeah, hi sir. I had 2 questions. One, with respect to Avenue 4, so what are the timelines that you are seeing in terms of completion of this project? And I'll ask my second question later. Thank you.
So, Sandeep, project, although the RERA timeline is 24-25, but definitely we are looking to complete it much before that.
Right, sir. So essentially, why I ask is because I believe Avenue 1 was started back in 2011 or 12, and now the OC has been received. So construction, is it taking so much time, or from where does that confidence to complete in 3-4 years comes?
So that confidence for completing in 3-4 years come from our Sunteck, our Naigaon project. We completed, I think, almost like 20 towers in less than 18 months. If the COVID would have not been there, we would have been, by now delivered the projects. Now coming why that project took so much time, that was not, the delay was not due to the execution. ODC was the first, like BKC was established first by Sunteck, like for the residential. ODC, there was no one who took the M scheme forward. That's why we got that land so cheap. In fact, we were the first people to, in fact, develop under that MMRDA scheme in ODC, in the new CBD policy. So there was a lot of clarity which was not there. So for that, the approvals took a lot of time. It was not, the delay was not due to the execution, unfortunately due to the delay in the approvals. So all those clarity and clarifications and the approvals now are in place, which unfortunately Sunteck had to go through because that of non-clarity in Sunteck Avenue 1 and Sunteck City Avenue 2. those now being that clarity being there, we are pretty confident about our execution capability, and I think there is no reason we should not be able to complete in 2 to 3 years Sunteck City 4th Avenue.
Thank you, Mr. Naik. Request you to join the queue for any follow-up. The next question is from the line of Biplab Debarma from Antique. Please go ahead.
Good evening, sir. Good evening, everyone. My first question is on the new launches, Vasai. In these two projects, what would be the typical ticket size and per square feet rate?
So I don't think we will be able to reveal what will be the ticket size and all. I think that we are definitely looking for both this project in the aspirational luxury category and a mid-income group segment. Both combination of both, especially in Vasai and the combination of both, and Vasind maybe only in the aspirational luxury side.
Fair enough. Sir, my second question is on the business development. Sir, post-COVID, especially in the past few months, with the residential seeing uptick, mainly amongst the reputed developers like you, do you see any change in expectations from the landowners while negotiating on JDA, JV deals? I mean, have their expectations increased in terms of negotiation? Like they want more post this, the uptick in residential sales in MMR, especially in MMR.
Fortunately, I don't see that happening, because I think that benefit will go to definitely the organized player and strong players with a strong financial balance sheet. The reason is very clear. Only I think after this problem of NBFC crisis and then the initial crisis of the COVID, I think only not more than 20-25% of the developer will survive. So the landlords will now get in fact, landlord will have only very few choices, and the good developer and organized developer will have many choices.
Okay, thank you, sir.
Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you so much, and good afternoon, everyone. Sir, one question is on the upcoming Vasai launch. Is it in the more or less same catchment area as Naigaon, and therefore can be competing at some level?
Sameer, I definitely don't feel, because the Vasai is totally a different market, Sameer. And Naigaon, in fact, Naigaon there was no market. Naigaon, I think all developers put together before Sunteck entered was in fact less than 15-20 apartments per month. If you see and Sunteck when entered, now the numbers have gone from that to another level, and we have created altogether a new market. I think we took over the market which was 2-3 stations ahead, which people used to go and buy in Virar and in Nala Sopara. Vasai is like a posh market of that micro market, and being this into more luxury category, I think this will in fact complement each other and not compete with each other. And it is having a total. See, this is like in Andheri. There are lots of properties, but Lokhandwala or Versova is the premium location. Again, in and around Powai, there are like so many properties very near to Powai. You have Pandu, Nahur, anything and everything, but Powai commands a premium. So this is being on the beach and bang on the sea, I think, and being in the Vasai West market, and Naigaon is our properties in Naigaon East. So this location is the most very posh location, and I think this will complement. That's why, not compete.
Okay, great. And second is, the current, interest rates are so low. I mean, why not lever up a bit more, and maybe, I don't know, what, 7.5%, 8%, and then, take advantage of the low interest rate and then, be a bit more aggressive in buying new projects, new land parcels?
Yeah, definitely, Samir. So I agree. I clearly said that in my last conversation also, that it's not that we will not buy the property if the property is available, and we will not put the money, and we may leverage the balance sheet. But we want to be very cautious. At the same time, aggressive, but very, very cautious. We are very clear. So don't want to be going overboard, and we have seen people burning their fingers badly. There is a lot of opportunities which are available at the satellite model. Till the time that continues, we'll continue to explore that, and we may end up maybe we will not compromise on the growth. I will always say that we will take the maximum. Till now, I think we have done the maximum acquisition even in this lockdown period. We have been one of the biggest beneficiary of the acquisition. So there is no compromise on acquisition or business development.
Great. So with your permission, one final question. Is there any target that you can give us, in a year you'll do maybe 2 Vasai kind of deal or something like that?
I think we don't want to keep any target. We want to do as much as we can do it, because where the capital is not involved, we are aggressively negotiating quite a few deals. We will be stupid to restrict ourselves to any number. And since now we are confident about our capability and whether it is acquisition, sales, and execution, I don't think we will stop ourselves by doing only 1 or 2.
Okay, great. Thank you very much.
Thanks a lot, Amir. Thank you so much.
Thank you. The next question is from the line of Vaibhav Pacholia from VK Capital. Please go ahead.
Hi, sir. I wanted to inquire, what is your opinion on how much the residential sales in Mumbai can increase on a percentage basis this year, maybe calendar 2001 or FY22? Say, I think normally last year was some 90,000 crores or 1 lakh crores. So what kind of increase can we envisage?
I think, very frankly, it is a very it's a question which very frankly answer which, to my knowledge and what is my gut feel and what is our assessment of the market, this year the market should definitely grow by minimum at least 10 to 15%. Looking at the current situation and the way the things are happening, we look that market should grow at least by 10 to 15. This is my personal view. That's what I feel.
Right. So as of now, we don't see the situation like 2011-12 where we were, like Mumbai was selling 1,50,000 apartments, like almost double of what it is selling now. That situation will take a lot of time to come, or it may never come?
No, I don't see that the situation will never come, or no, I want to be more cautious. Even if that, Weber, if you have to understand, even if that increases by 10 to 15%, the number of developers which were doing in 2011 1,50,000 crore, well, let's say 100. Today, even if that becomes 1,20,000 crore, the number of developers would be only 25% of that 100. So each developer the market share of the developer who will survive and are strong and organized will increase substantially over a period of next 2 to 3 years. That much I can say.
Thank you. Ladies and gentlemen, I would now like to hand the conference over to Chairman and Managing Director, Mr. Khetan, for closing comments. Thank you, and over to you, sir.
Thank you all for taking out the time from your busy schedule today. In case if any of your queries have been left unanswered, you can please get in touch with me or my team. We look forward to your continued support. Thank you once again for joining us today, and please be safe. Thank you once again.
Thank you very much. Ladies and gentlemen, on behalf of Sunteck Realties, that concludes this conference. Thank you all for joining us, and you may now disconnect your line.